Hi guys and welcome to the trading show. This week we are gonna talk about
markets. Bitcoin peaks at record high. Our portfolio. Soybean futures rise. Tip of the week. Bollinger reversal on the gasoline futures. And the weekly rollovers.
And if you are interested in systematic trading, then subscribe to our channel. I am Francesco Placci, Head of R&D at Unger Academy. Let's start from the market overview to see together what happened during the week. Extremely positive week for the financial markets. Practically everything goes up. We see in this chart the stock indices that are at historical highs, Nasdaq and mini S&P, with returns ranging from 3% of the Nasdaq to almost 4.5% of the DAX future. Bitcoin also rises, reaching historical highs with a 5-day performance of over 25% and a 3-month performance of over 100%. The entire energy sector is growing, as well as the metal sector, with the silver's returns above 8%. Meats goes up, soft commodity returns are mixed, and cereals also goes up. The only sector slightly negative is bond. While currencies are in a positive trend, we see here in detail the EUR/FX, which is continuing its bullish run. Therefore, we can say that in spite of the difficulties of the real economy, the financial market seems not to notice it. On the contrary, they continue their positive trend despite the sudden slowdown of the economy due to the pandemic. As for volatility, we see a decline in volatility, as usual with markets that are quiet and in uptrend. This is especially true for equity indices, but we still see low volatility values everywhere. However, we know that on annual basis the volatility is still high compared to the historical average. If we take a look at the implied volatility of equity indices, we see a volatility term structure in contango. In a certain sense, its natural state, where short-term volatility is the lowest, and as maturities lengthen, we see higher volatility values. This is a sign that markets are not expecting any immediate problem. So, all in all, traders seem to be betting on a good year-end for the financial markets. After seeing some key statistics on financial markets, and given the fact that automated traders also use this data to build their trading strategies, as usual, we will now take a look at our portfolio of trading strategies to see how systems have reacted to current market conditions.
Hello everyone, from Alessandro Danos, and welcome to this new appointment with the analysis of our portfolio. This week I want to show you again a strategy on the soybean futures. This strategy is a bias strategy, so it enters both long and short at specific times of the day. We can say that the system make the longs during the first part of the session, while it makes the shorts few, just to be honest, on the second part of the day. Why it makes few short trades? That's because the average trade for this system, there is, as said, a bias, and it stays few hours in the market, so let's say 4 or 5 hours per trade, and so it's clear that the average trade cannot be very big because the time percent in the market is extremely low. And so the trade doesn't have enough time to realize big profits. By the way, we can trade this strategy also if the average trade is not so big, because the soybean future market is first of all very liquid, and so in this case is the slippage that we will pay when we will go live will not be so big. And also the slippage paid on a strategy like this with market orders will not be so big. We can see that the equity line was very good, but also, as I said, the strategy makes, as you can see, more long trades than short trades. And that's because on the short side the average trade was pretty dramatic. I couldn't find something that could fit and filter in a good way the short side, and so I decided to filter it very much, and so we can say that this strategy is quite 90% long only. Now we can have a look also that this kind of strategy, of course because stays a little in the market, has a very low drawdown. We can see that is at around 9,000, 8.5. We trade this strategy with 3 contracts, and so is less than 3,000 per contract, which is really low on futures. Of course, the equity line of the long side is more tricky, we can say, more jagged in a certain way, but that's because also the long side makes more trades. And we can see that this is the buy and hold of the soybean, and the strategy exploited very well this bias. Also the short side, in his small way, performed well, also reporting a profit. Now we can change and have a look also at this strategy on Bitcoin futures. You may know that this week the Bitcoin futures reached the all-time highs, and this strategy, that is a breakout, an intraday breakout, took these two beautiful take profits, and this one specifically was taken in the second bar after the entrance. We can see, if we zoom, that the strategy entered, and at the very second next bar, the strategy took a profit target. Profit target of a value of $3,000, and thanks to these two profits, the strategy reached new peaks, and as you can see, the last months the strategy improved what was still very profitable and good, and so we are very happy about the Bitcoin that in 2020 was very volatile, and the strategy exploited very well this volatility.
Hi everyone, and welcome from Andrea Unger. Today we will try to have a look to the RBOB gasoline with a tiny different approach, and more in the details. The RBOB gasoline is an energy future, and it's listed in the NYMEX exchange. There is part of the CME group that is located in Chicago. And in particular today we will try to see if it's profitable or not trading the gasoline with a mean reverting approach. And more in the details here, you can see on the chart there are there is an indicator, there is the Bollinger Bands, and it's applied to different time frames. And here what we did is to create a very simple strategy, and in this case the strategy consists in buying when the price, so the closing price of course, crosses over the lower band, and selling, so going short, when the price is crossing below the upper band. And we've also set up stop loss of 2,500 dollars, just to avoid the worst trades into the history. So we will cut a little bit the losses with big stop loss. And here the strategy, if we have a look, so first of all to the let's have a look to the 15 minutes chart first of all. So here we will have a look to the 15 minutes chart. You can see just from the annual period analysis there isn't a certain consistency we would expect from a profitable trigger, and in particular here most of the years are negative, so you would have gotten negative results, and so this kind of approach it doesn't seem to be so profitable in on this market. And you can clearly see here you would have suffered a lot and you would have wasted a lot of money. So on 15 minutes chart it's not profitable at all, as you can see from the equity curve and from the report. So let's have a look to the 30 minutes chart, so changing the time frame a little bit, and the strategy is the same, and I forgot to mention that I used for Bollinger Bands the default settings, so 20 periods as a look back and 2 standard deviations to calculate the upper band and the lower band. If we have a look to the 30 minutes chart, so the backtest on the 30 minutes chart, the situation doesn't seem to be better than before, and in general there is a consistent loss all over the historical period considered. There are some positive years, of course, but most of the times you would have lost money, and also in the positive years, of course, you would haven't found a real positive year because of the impact of the slippage and the commissions. So also this time frame is confirming us that most probably the reversal strategies are not the best on the RB/OB gasoline. And if we have a look to the 1 hour chart, we can see that the situation is worse than before, and most of the years are negative at all. There are just 2 positive years, and the equity shape is not that well as also in this case. So also here most of the years you would have lost so much money, and all over also at the end of the historical period considered you wouldn't have earned money at all. And the last chart is on 2 hours, so 120 minutes, and the situation is pretty similar. I mean, it's not that similar, but you can see a certain consistency in the losses. So from here to here you would have lost money with a certain consistency, and the same can be seen also from the annual period analysis, and you would have lost a lot of money with this kind of approach. So for this kind of underlying, I strongly suggest you not to try to trade it with reversal approaches because they are not profitable. And I want to give you also a suggestion. When you see that a certain trading approach doesn't pay from the beginning on a certain markets, I would suggest you to avoid trading that market with that certain trading approach, just because it seems that that kind of approach doesn't suit with the nature of a certain market, and in this case that market is the RB/OB gasoline future. So if the RB/OB gasoline future is so volatile and directional, I would suggest you not to waste money and time in developing certain trading approaches, and if you see from the beginning that a certain trading approach is not positive, just leave that approach and use your time to dedicate something else. Because most of the times, if I would continue to optimize this kind of approach on this product, I would probably get a nice equity curve, an equity curve with a nice equity shape. But the problem is that to get that equity shape and to get a nice equity curve, I will probably fall into a severe overfitting situation. So most probably I would have extracted the best cases from the past, and they will probably not happen in the future. So I would have just over-optimized the past to get the best combinations, but in reality I will not be able to replicate the strategy with the same goodness in the future.
Rollover calendar. As we know, today is the triple witches day, the simultaneous expiration of stock futures, index options and stock options. Actually, American futures are rolled about a week in advance, so today it is necessary only to roll over all European stock index futures. The next week we have the settlement date of crude oil future on the 21st December, but also in this case we are already active on the following contract. Finally, I remind you that we'll follow all the other energy futures and that at the end of the month there will be the expiration of the Bitcoin on 24th December. Well guys, so if you want to learn how to build trading systems like Andrea Unger, the only 4-time trading world champion with real money, go ahead and click on the link below. You will be able to pick a date and a time for a 45-minute call totally free with one of our tutors. We will talk about your current situation, what you are doing in trading and what you would like to do instead. And we will try to understand together if we can help you achieve your trading goals. Finally, if you like this video, press like and then subscribe to our channel. Thank you for watching. See you next week with another episode of the Trading Show.